Hello, today we are solving October 2024 paper, Unit 2, question number 6. On October 1st, 2023, at the start of the financial year, the following were the balances in the book of Akamas PLC. Okay, the ordinary share capital was worth this much, share premium reserve was this much, retained earnings reserve was this much, general reserve was this much, and foreign exchange reserve was around 2 million. Then certain transaction took place, okay, and there was a loss at the end of the year. Prepare the statement of changes in the equity for the year ended this much 30th September, showing the figures in millions of pounds. You should complete the table in the question paper. So we can see that here they have given a, okay, they have given a table. This table we have to complete, okay, based on whatever the criteria or the transaction changes that has taken place. So let's complete the table. Okay, so first one is the balances at the beginning they have given. Okay, the balances at the beginning they have given. Ordinary share capital, we can see that it is 30 million. So I'm going to write everything in terms of million. Okay, so that is equal to, so 30 million. Then share premium reserve was 6 million, retained earnings reserve was 7.03, and general reserve was 2.5, and foreign exchange reserve was 2 million. Okay, like this it is written here. Now what are the other reserves we have to see, we have to include when the changes are happening. First one is there is a transfer of, okay, 1.5 million from the retained earnings reserve was made to the general reserve. So let's calculate this. So a transfer from here, okay, 1.5 million, okay, 1.5 million is going to happen to the general reserve. Okay, they are going to, I'm going to transfer this amount to the general reserve. Okay, so I'm going to deduct from the retained earnings, take away from the retained earnings and put it in the general reserves account. Okay, general reserve account. So there is no change here. Okay, here it will not affect the equity, not going to affect the equity statement. You are just transferring from the retained earnings to the general reserves. Then on 15th October 2023, a final dividend of 2.1 or 0.021 per share for the year was paid to the ordinary shareholders. We saw that there are 30 million shares. Okay, 30 times 1. I can do the working here. So final dividend that was issued is equal to 0.021 times, okay, this times the number of shares. Okay, the shares worth is 30,000 divided by 1 million. Okay, that is 1 pound share. Okay, so the number of shares you have to include, so that is equal to 30 million, okay, divided by 1. Okay, you should find the number of shares. If it was 0.5, you have to divide it by 0.5 and then find the number of shares. So the final dividend is equal to rate times number of shares. Okay, that is number of ordinary shares, that is equal to the final dividend that was issued. Okay, that is equal to here 0.63 million. Okay, 0.63 million pounds. It is going to be issued from the retained earnings. So any dividend I'm going to issue from the retained earnings. So this is going to reduce my retained earnings. So it is going to be 0.63 million share worth of dividend was issued. Now this is going to affect my equity. Okay, so it is going to affect, it's going to reduce my equity because I have issued from the retained earnings 0.63. Okay, now revaluation of the property. Now the property with a book value of 1.65 million, okay, it was revalued to 2090,000. So now let's calculate the revaluation. Okay, the revaluation of the property. Revaluation of property, we can see that of the property, we can see that it has got revalued up. It has got revalued to 20, okay, 2090,000 minus, it was earlier it is 1.65 million, okay, which we had seen. So the difference is equal to 440,000. So 440,000, and it is in millions, okay. So that is equal to 0.44 million, okay. Now this one, where will you add it? You have to add it. It will increase in revaluation reserve. So you will have to include a revaluation reserve. Okay, revaluation going to be equal to 0.44 million. Okay, so this will increase the equity section. Okay, this is going to cause an increase in equity section. Then redeemable shares. Okay, so on 13th Jan 2024, 3 million ordinary shares, £1 were redeemed at the present price of market value of 1.2 per share. So let's calculate how much of the redeem cost happened. Okay, so the fourth one is, so it is, say they are saying or the ordinary share capital value will be equal to ordinary share capital value is going to be now become equal to 300 times 1, okay, times 1, that is equal to 300 million. Okay, 3 million, sorry, it is equal to 3 million. Is a premium. The premium is going to be equal to premium, share premium value is going to be equal to 300 times 0.2, 300 times 0.2. Okay, so this represents a premium portion, so that is equal to 600,000. So that is equal to 600,000, that is equal to 0.6 million. Okay, and here this one, ordinary share capital value is going to be 3 million. Okay, this, the value is going to be 3 million. Now these were redeemable shares. Okay, these were redemption of shares that had happened. So any redemption of shares is going to decrease my share capital. Okay, my share capital and share capital reserve and my retained earnings. Okay, and then I'm going to transfer it into capital redemption reserve. So 3 million, okay, 3 million shares were redeemed back, and out of it share premium value that was redeemed was 0.6 million, and then the total, okay, it would have affected the retained earnings. Okay, this is going to decrease my retained earnings, and so, and then I'm going to create a capital redemption reserve, and then capital redemption reserve, okay, capital redemption reserve I'm going to create, and then I'm going to transfer it to this one. Okay, so 3.6 from the retained earnings, so the value of it will be 3.6 has been used. Okay, 3.6 from the retained earnings has to be used to redeem the shares. Okay, to redeem the shares. Then 20 on 21 Jan 2024, a transfer of 8.8 million was made from the foreign exchange reserve to the retained earnings. So from the foreign exchange reserves, okay, there was a transfer, so that is equal to 0.8 million. Okay, and I'm going to transfer this money to retained earnings 0.8. Okay, then they are saying that on September 2024 the directors used all the funds in the retained earnings to pay the final dividend for the year ended 30th September 2024 to shareholders. So let's calculate this. How much was the dividend, final dividend issued on this date on 20th September? So final dividend issued was equal to the whatever was left out from the retained earnings. Okay, whatever the issues were left from the retained earnings. So let's calculate that. At the beginning they had 7.03. So 7.03 minus, okay, 1.5 minus 1.5 minus 0.63. Then there was a negative of minus 3.6, and then you have transfer positive, so zero point 0.8, so plus 0.8, 0.8, so that is equal to 2.1. Okay, so 2.1 million of the retained earnings was left over. So this entire retained earnings, they are going to use it for paying off the dividend. 2.1 million final dividend to all the shareholders. So this is also going to leave the business and going to reduce the equity. Okay, so this is going to equity. Okay, now this also will not affect, this is this transfer of from the foreign exchange reserves to the retained earnings, it is not going to affect the equity. Even the transfer from the general reserves to the retained earnings, okay, or from the retained earnings to the general reserves, it will not affect the equity. It is just a transfer within the equity sections. And then finally you have comprehensive loss for the year. They have mentioned it is 0.087 million. Okay, so let's write it here. There was a loss, they had a loss at the end, 0.087 million loss. So this is what will be left with the retained earnings. Now let's calculate the balances. Okay, at the beginning let's calculate first the equity section. So first one is 30 plus 6 plus 7.3 plus 2.5 plus 2, that is equal to 47.53. Okay, so 47.53 million. Okay, 47.53 million was the equity at the beginning. Now there are changes to the equity section. So 47.53 minus 0.63 plus 0.44 minus 0.36, okay, minus 2.1, and there is a loss, okay, minus 0.087. So that will be equal to 41.553. Okay, this will be the final equity at the balance, equity balance at the end of 30th September 2024. So the other sections also you have to update. So on this section it is 3.6. okay, on this section it is positive 0.44, okay, for the revaluation reserves total. Then for the foreign exchange reserves, it was at the beginning 2, now it is less 0.8, so it will become equal to 1.2. okay, so it is equal to 1.2, 2 minus 0.08, so 1.2. Then 2.5 plus 1.5 for the general reserve, so it is going to be equal to 4 million. Okay, 4. And then you have here ordinary shares 30 minus 3, so that will become equal to 27. Okay, and then share premium, okay, was 6 minus 0.06, that is equal to 5.4. Now these are the shareholders left after the redemption of shares, and the redemption of shares is offered from the retained earnings, okay. So that is equal to, it is also affected, so we have included that, and you have to fill up all the changes to the equity section.